Dear learners, in this lecture, we shall be continuing with our discussion on distinguishing the concept of sale from certain similar concepts. In this part 2 lecture, we shall be distinguishing sale with a gift and secondly, a hire purchase agreement. Now, starting with sale and a gift. So, sale is something we've already examined under the various lectures on definition and concept of sale. Gift, on the other hand, is a transfer of ownership of property that is made voluntarily without any consideration. It is made by one person who's known as the donor to another person who's known as the donee. The law relating to gifts is contained under the Transfer of Property Act. So gift has certain essentials such as it is voluntary in nature, there is no monetary consideration, it is a purely gratuitous transfer without expecting anything in return. And so on these points, the gift may be distinguished from a sale. So in a sale, there is consideration and consideration in a special form that is in terms of money, whereas in a gift, there is a transaction by only one of the parties of giving away the gift. The other party merely has to receive it. So, in that sense, sale is bilateral because it imposes an obligation on the both the parties, buyer to pay the price to the seller and seller to deliver the goods. Whereas gift, on the other hand, is unilateral in nature because as a gratuitous act, only one party gives the gift and the other party merely has to receive it. So the element of reciprocity is there in a sale while it is absent in case of a gift. So the nature of a sale is commercial and that is why it is subjected to tax according to the appropriate law, whereas the nature of the gift is personal, although taxes relating to immovable property such as capital gains may apply to it, but the nature is fundamentally different. However, there are certain kinds of contracts which cannot be distinguished as sale or gift. So, for example, in various commercial contracts, we get such kind of invitation to offer. Although in common parlance they are communicated as offers from the seller, but legally speaking, they are invitations to offer. So you have buy one, get one free. So the question or the controversy arises that you are buying one thing, but you are getting something else for free. So whether the contract is a sale or it is a gift or it is a combination of both. So for one free item, it is gratuitous, but it is conditional upon the purchase of another item which is appended to it. Now, similar nature was under discussion in a case Esso Petroleum Limited versus Commissioner of Excise and Customs. In this, in exchange for cash, the seller provided petrol and a free coin. So the question was whether this coin, which was a subject matter of exchange but for free, whether sales tax can be levied on this coin and whether it is a sale. According to the tax authorities, it amounted to a sale, but it was opposed by somebody on whom the tax was levied. So The claim of the tax authorities was rejected and it was unsuccessful, and the court held that the coins were not chargeable for tax. They were exchanged under a binding unilateral contract, but it was not a contract of sale. So therefore, such kind of contracts contain two contracts. One is the principal contract, which is buying of goods in exchange for money, and there is a second contract which is known as a collateral contract, which does not have any independent existence of its own, but it is dependent upon the main contract for its survival. So if there is no contract for the sale of petrol in consideration for cash, no free coin can be given. If free coin could have been given irrespective of the principal contract, it would have been a gift. But here it is not a gift, but rather in the nature of a collateral contract. So this is how a sale is distinguished from a gift, and such kind of contracts which have a mix of gift and sale. The next is the difference between sale and hire purchase agreement, another kind of a contract in which there could be transfer of property. So what is a hire purchase agreement? Hire purchase agreement is regulated under the Hire Purchase Act, a different legislation. It means an agreement under which goods are let on hire and under which the hirer, somebody who receives the possession, has an option and not an obligation to purchase them in accordance with the terms of the agreement, and includes an agreement under which the possession of the goods have to be delivered to the hirer by the owner. The property in the goods is to pass to such person on the payment of a last installment. So there are multiple installments that the hire has to pay. The hirer has the right to terminate the agreement at any time before the payment of the last installment and transfer of property from the owner to the hirer. So hire purchase agreement is a type of a business arrangement in which the customer pays the cost of the asset in the form of some initial down payment and an outstanding balance in some installments. They can be monthly, quarterly, or yearly, depending upon the terms of the hire purchase agreement. During this period, the ownership of the asset or the goods, it rests with the seller, that is the hire vendor, until the buyer or the customer, he purchases by payment of the last installment. So the total price can be some down payment as well as periodical installments. So hire purchase agreement, they originate like through some temporary possession of the property. Now down payment can be made. Apart from that, some periodical installments have to be paid. On the payment of last installment, the hirer can exercise his right to purchase the goods. So there are two parties under a hire purchase agreement. One is known as a hirer, who is the person who obtains or has obtained possession of goods from an owner under a hire purchase agreement, and includes a person to whom the hire's rights and liabilities under the agreement have passed by any assignment or operation of law. So the hirer can also assign the contract. The owner means the person who lets or delivers the goods to the hirer for his temporary use as per the terms of the hire purchase agreement. So the essentials of a hire purchase agreement are: first, there has to be a delivery of goods, delivery in terms of possession, not ownership. So delivery has to move from the owner to the hirer. Then the hirer has to pay a certain down payment to the owner, followed by periodical installments. Then at the payment of the last installment or before that, he has the option to transfer the ownership. However, before the last installment is paid, he also has the right to terminate the agreement by not paying the installments and returning the property back to its owner. Or otherwise, if the hirer defaults on the payment of any installment as per the hire purchase agreement, then the owner can also resign the contract. So, hire purchase agreement is in the nature of bailment, somebody who gets possession of goods for a particular purpose, which could be eventually ripened or converted into a full-fledged sale. So, hire purchase agreement to begin with is not a sale, but there is an option to legally convert it into a sale. Now let us discuss a case on a hire purchase agreement and its differentiation with a sale. A borrowed B's piano for 3 years at stipulated rent to be paid every month. A may terminate hiring by delivering piano to B. If A punctually pays full sum of 50 Great Britain pound by paying 14 Great Britain pound on the date of signing and by 36 monthly installments of 1 Great Britain pound, the piano shall become sole property of A. Until such amount is paid, the piano shall continue to be the property of B. After 4 months, A pledged piano to C without consent of the owner. B wanted piano back from C, but C contended that since A had agreed to buy the piano, he had right to pledge it. So the question which arose on the facts of this case was whether the agreement between A and B, that is the original agreement, whether it is an agreement to sell or a hire purchase agreement. So as you can see from the facts of this case, the piano was originally only borrowed by the hirer from the owner. The second was that he was to pay 36 monthly installments, only after which the property could be transferred to the hirer. Until such amount was paid, property shall continue to be the property of the owner. So here it was a hire purchase agreement which could be completed only upon payment of the last monthly installment of 1 Great Britain pound. However, before the payment of the last installment, A had used the property which is synonymous with that of an owner. So only the owner can pledge it. But A was not the owner. So therefore, B could get the piano back from C because C did not get any ownership rights over it because the transferor did not become the owner. He was only a hirer of the goods. So with this, we come towards the crystallization of the differences between a sale and a hire purchase agreement. So the law for both the concepts is different. For sale, it is the Sale of Goods Act. For hire purchase, it is the Hire Purchase Act. The transfer of property in a sale is immediate, whereas on hire purchase, it is deferred on the payment of last installment. The position of the buyer in case of a sale is that of an owner, whereas in case of a hire purchase, initially it is that of a bailee. Then on the payment of the last installment, it is converted to a buyer. The payment in case of a sale is simply the price of the goods as consideration, whereas in a hire purchase, it is layered. Firstly, the hirer has to pay hire charges, and secondly, he has to pay the amount payable for purchase through installments as per the hire purchase agreement. So in a sale, there is a concluded transfer of title. Therefore, the buyer can transfer the title to somebody else. But in case of a hire purchase agreement, the hirer does not have the title to the goods, and therefore he cannot alienate or transfer the goods to somebody else. So, a hire purchase agreement can have installment plans or rent to own. These are the two different ways by which we know hire purchase agreements. The advantage of hire purchase agreements is that it lessens the one-time burden on the parties who wish to buy expensive goods. So because the pricing can be deferred over a period of time, and during that period of time the goods could continually be used by the hirer. So it adds to the advantage of the hirer because the cost can be spread. In case of a default, the goods revert back to its true owner. The rights of the hirer are only to use the goods as a bailee, somebody who has possession but does not have any ownership rights. So he only has certain special rights over it but not any general right. So hire purchase agreements, whether they are subject to sales tax only at the end when the hire is converted into a full-fledged sale. So with this, we come towards the closure of the topic of distinguishing sale with allied concepts. In this two-part lectures, we have distinguished sale with agreement to sell, exchange and barter, contract for work and labor, gift, and lastly, a hire purchase agreement. With this, we end the lecture on distinguishing sale from other allied concepts. Thank you very much.